Hello traders, and welcome to Explain the Charts. Today is October 13th, 2024, and we're looking at the USDCAD pair, a currency pair that has been experiencing a lot of volatility in recent weeks. Looking at the news, we see that the US dollar has been strengthening against a basket of major currencies, driven by strong economic data and the Federal Reserve's hawkish stance on interest rates. However, the Canadian dollar has been under pressure due to concerns about the country's economic outlook and the potential for further interest rate cuts by the Bank of Canada. The Canadian economy is facing headwinds from the global slowdown, which is impacting commodity prices, including oil, Canada's largest export. With the Bank of Canada expected to ease its monetary policy further, the Canadian dollar is likely to continue to weaken against the US dollar. These factors are creating a bullish environment for the USDCAD pair, with traders expecting further gains in the near term. Let's turn our attention to the charts and see if they corroborate the new sentiment. Looking at the daily chart of USDCAD, we can see that the pair has been on an upward trend for the past few months, with a clear bullish bias. The price broke through a key resistance level at around 1.3500 in September, indicating a strong momentum. The recent pullback from the recent highs around 1.3700 is a healthy correction and could present a buying opportunity for traders. The 50-day moving average has been acting as strong support for the price, and the 200-day moving average is also providing support, suggesting that the long-term trend is still bullish. The RSI is hovering around the 50 level, indicating that the pair is neither overbought nor oversold. The MACD is still trending upwards, confirming the bullish sentiment. We can also see that the price has been trading above the 200-day moving average, further reinforcing the bullish bias. Let's zoom in on the 1-hour chart to get a better understanding of the short-term dynamics. The 1-hour chart shows that the pair has been consolidating above the 1.3600 level for the past few days, forming a symmetrical triangle pattern. This pattern can lead to a breakout in either direction. A breakout above the triangle resistance level around 1.3700 would confirm the bullish sentiment and could push the price towards the next resistance level at 1.3800. However, a break below the triangle support level around 1.3600 would suggest that the bullish momentum is fading and could lead to a pullback towards the 1.3500 support level. The RSI is currently at 50, indicating that the pair is neither overbought nor oversold. The MACD is showing a bullish crossover, suggesting that the momentum is turning upwards. The Bollinger Bands are relatively wide, suggesting that the market is expecting a period of volatility. Now let's switch to the 15-minute chart to see how the market is responding to the news events. The 15-minute chart shows that the pair has been trading in a range for the past few hours, with a lot of back and forth movement. The price is currently hovering around the 1.3650 level, which is near the center of the range. The RSI is currently at 50, indicating that the pair is neither overbought nor oversold. The MACD is showing a bullish crossover, but the momentum is not very strong. The Bollinger Bands are relatively narrow, suggesting that the market is expecting a period of consolidation. This suggests that the market is indecisive and is waiting for a catalyst to break out of the range. The upcoming Canadian employment data is expected to be released later today, and it could provide a catalyst for the market. A strong employment report would be positive for the Canadian dollar, which could lead to a pullback in the USDCAD pair. However, a weak employment report would reinforce the bearish sentiment for the Canadian dollar and could lead to further gains in the USDCAD pair. We'll be watching the news closely and updating our analysis accordingly. In conclusion, the news sentiment suggests that the USDCAD pair is bullish in the near term, with further gains expected. The daily chart shows a clear upward trend, with the 50-day and 200-day moving averages providing strong support. The 1-hour chart indicates a period of consolidation, but a breakout above the triangle resistance level could push the price towards the next resistance level at 1.3800. The 15-minute chart shows that the market is indecisive and is waiting for a catalyst to break out of the range. The upcoming Canadian employment data is expected to be released later today, and it could provide a catalyst for the market. Keep an eye on the key price levels. 1.3500, support, 1.3600, support, 1.3700, resistance, and 1.3800, resistance. A break above the 1.3700 level would confirm the bullish momentum and could push the price towards the 1.3800 level. A break below the 1.3600 level would suggest that the bullish momentum is fading and could lead to a pullback towards the 1.3500 level. Be sure to stay updated on the latest news and economic data releases, as they can have a significant impact on the direction of the market. Happy trading!